Hey everyone, we made it! Yay! I've been approved onto the Popular Investor Program, and yeah, this is like a dream coming true for me. So, like I've said in my previous video, I have been trying for more than a year. I've been rejected many times, but now finally I have been approved, and I am so happy. Yeah, it was just so amazing to get the email from them, and I had to change my profile picture because they want to see your face, which I understand because it builds that trust relationship with your your copiers, because they are basically your clients. And then also I had to make a change where I can now, or where it shows my real name. So you can see that my dashboard now looks a little bit different. So you can see here, I have this cadet investor. It's like a dashboard that I have extra, and you can see also now my real name is showing as well. If you click on the cadet investor, you can see here that it shows my level, and then you can click on your benefits. There's nothing currently, so you see that it doesn't show my assets under management. Now I've read that you have to have 20 copiers to be able to see how much assets you have under management. But yeah, this is pretty cool. I can now also see who is copying me. I can see how many copiers I've had at every day for past month. You can now go 30 days. You can go choose any month. And then if you go down, you can see who recently joined. So for Rodri, I know you've been a copier for a long time. So welcome back. I see he just closed the copy and he opened it again. It looks like you balanced out, your, funds between all of the people you are copying. And yeah, then you can see how many page views that you get, in the last 30 days. And then also there's some stats, but yeah, there's not a lot showing currently. Because yeah, obviously I've just joined and there's still a long road ahead. But yeah, this is so cool. So yesterday I finalized my Q1 revision of the RT Invest portfolio. So I did rebalance it at the beginning of the year, but now that I'm on the Popular Investor Program, I just spent some extra few hours and I've just thought about everything, and I've made it to be even more suitable for copying. Like before it was, but it was kind of like a lot of my close friends are copiers, and so it was kind of more tailored for my inner community. But I've given it some more thought, and I've just added a few very exciting ETFs to the portfolio as well. And so I will be depositing money today, and then I will be making these changes that I intend to make, and I'll talk a little bit about it now. And then only once that is done, I'll put out a notification, when the portfolio is ready for copying. So let's quickly look at what are some of the changes that I'm going to be making. So if you look at my top post from yesterday, you can go and see. So yes, I'll be adding an ETF. It's called KRBN. If you click on it, you can see it's the Crane Shares Global Carbon ETF. Now, guys, this is very interesting. I've only recently became aware of, how companies buy, carbon credits. So a company, and it's America and it's Europe, and I think there's another region. I'll check now. Another region, that participates in this. So this ETF tracks. There's a specific index. There's an index name. I'll give you that index name now. Let's see. So the index is the IH Market Global Carbon Index. So if you look at this, it basically, there's a whole, it looks almost like a small white paper of what exactly this index is. But it's basically, it says here, it's designed to reflect the performance of the most liquid segments of the global carbon credit market. So it's basically this index, and you are in effect buying, into a credit futures contract. But just the gist of this. So what was very interesting to me was, how companies, like companies like Tesla, they don't have a lot of, carbon footprint. So they have a lot of, carbon credits. So because they have a lot, so they derive a big portion of their profits from selling their carbon credits to other companies. So this just blew my mind. Like I honestly didn't know that there were things like that. And there are companies that have like heavy carbon footprints, and they need to, so ultimately the drive is to get the global CO2 emissions as low as possible. That's the ultimate goal, and that's why companies only get allocated a certain, amount of, carbon credits. So, and it's just so cool how companies like buy these things from each other. So a company that is like that has a heavy carbon footprint, so it needs to now go and buy carbon credits. Let's say it runs out of carbon credits, it now has to go and buy it from other companies, or the other option is to get, their carbon footprint lower, so that they don't need to go and have this big expense to go and buy, other carbon credits from other companies. So it's just such an amazing system where it just forces companies to either become, more efficient, or just pay up a lot more money for, putting filthy stuff into the air and ultimately contributing to global warming. Now, I'm not an expert on any of these things. I've just partly, let me show you this. When I became aware of this, I went and I looked on eToro and I saw that, this ETF is available. And if you go look at this chart, so you can see that it doubled in price. So look at this, 20, so let's say 25, it's now on 50. So it basically doubled. You can use this nice chart here. So from 25, so it doubled. What was this? In January, in 1 year, the price doubled. If you invested in this ETF a year ago, your money would have doubled in 1 year. So I think there's just a lot of attention. I was reading, and then I saw, just this hype around carbon credits. And I looked on eToro and I found an ETF where we can, invest into this industry and, indirectly into the index. So this is pretty cool. So that's one thing that I've added. Let me quickly go back, and then also I've included the AAXJ. Now this is all it's like a broad Asian market exposure. So it's all the Asian countries, big Asian, like it's Korea, you have Taiwan, you have Malaysia, you have China, everything, or a vast area, of countries that you cover in this one ETF, excluding Japan. So it just ups our Asian exposure a little bit. And then also I have this IAPPD. So this is a dividend ETF, and that is based on the London Stock Exchange. And this ETF is only for Asian companies. So basically I'm adding to our dividend earnings ability, and also I'm adding to our Asian exposure at the same time with that ETF. So I've chosen that ETF as part of the research that I've done for my Battle of the Dividend ETFs. So I've made a video on that. You can go and check on my channel. There's a video. I've made a 1 year challenge where all these different dividend ETFs, battle against each other. So we're going to see next year, January, we're going to see which ones performed the best. And then, we will make, further decisions based on that outcome. But I've chosen that for the RT Invest portfolio. Like I said, for the two purposes of dividends and both Asian exposure. And let me just see. I've also I've made some small changes to the crypto. I'm going to be adding some Dogecoin as well. So you can see we have a very small percentage into meme coin investing. So like you don't want too much money into meme coins because they are very speculative and it's very high risk. But you also don't want to not be a part of it because you never know what's going to happen. So less than 1% exposure to them, might, the payoff on that, can be quite significant. You can have a lot, these coins tend to like 10, 50, 100x even very easily. So that is a good return. But in the event where you lose, like if it goes to zero, it's a small price to pay for, I always feel like you have to have that little bit, of money that's just there for experiments or, I wouldn't say YOLO. It's just a higher risk kind of investments. So I'm going to be adding some Doge, and there's our new ETF. And then also I've added, there's our other one. And I'm also contemplating adding Meta and Tesla. So these are the two companies that I have very, very high conviction in for the next 5 to 10 years. Meta will revolutionize, everything in the internet, like Web3. It will, be a very big front runner with everything metaverse going forward. And then Tesla, I mean, just look around you. The electric vehicle market is booming. Like, we stay in Korea, and there's currently, I would say, probably around 20 to 30% of the cars are electric vehicles. It's just an industry that's being pushed so much. Like, I can just see the market cap of these companies grow exponentially in the next 5 to 10 years. And also, if you look at Tesla's earnings, the earnings that came out now in December, it's phenomenal. They pushed out so many more cars than anybody expected. The Wall Street expected a lot less, and they just exceeded everybody's expectations. And that just shows you, if you look at all the the giga factories that they're putting up in Shanghai and all over the world, in Berlin, in Germany, I think, it just shows you that they are gearing up for this next level, and we're going to see a lot more from them, coming in the future. So, I don't really like investing into single stocks. They are risky, but I'm contemplating. I think I'm going to do it. I'm going to add 2 small positions for those 2 companies as part of the portfolio, and I think that will just round it off nicely, and hopefully, we will see the portfolio perform over the next year. But also, I have to say, we are largely invested into the American markets. So, if you look at the total stock market, it is really suffering. Yesterday, we just had another, very bad day. You can see, we had this double top, and it's just been rejected down. So I personally think the pain might, get a lot worse. I don't know. It might get a lot worse for the next while. But also, the portfolio has quite a big stake, around 15% exposure to crypto, and the crypto winter might be looming for us. So that might cause even further drawdown. So, I don't expect that much growth, for the portfolio in the next few months. But, if you use this opportunity to dollar cost average every month, every week, minimum size is $250. If you use this opportunity to dollar cost average, just copy open trades every time on the RT Invest portfolio, you would just get that buying price lower. And, by the time these markets swing, as soon as the cryptos turn around, as soon as the stock market turn around, you will see your portfolio boom, and we will be the ones in profit. The actual RT Invest portfolio might not see the same returns because we are buying, now is a good time for the new positions, but I've opened a lot of them when, prices were very high. So it will take some time for the RT Invest portfolio to reflect that growth. But for you guys, dollar cost averaging into the portfolio can get those buying prices very, very low, into all the different markets, and you will see, those profits coming in a lot sooner. I hope this video helps, and thanks for supporting me. If you are new to eToro, you can find my sign up link in the description below. If you want to, you can copy my copy portfolio, RT Invest portfolio, and I'll make videos. I try to make them as often as possible to give you my thoughts on what I think is going on. And I hope that you guys enjoyed this, and also it would help me out if you subscribe to this channel. And I will see you in the next video. Thanks a lot for watching. All right, goodbye.